Economists predict a 2020 recession. Let's have a look. Hello everyone, Florian Heise here, Stein in hand, and I thought we'd have a look at this article that was shared to me by a viewer regarding economists predicting a tough year ahead with 21% chance of a recession. So let's have a look at this and then some of the interactive charts that are also in this article. Because, well, I think all of us can agree chances of a recession might be a little bit higher than 21%. So Australian households will face another year of slow wage growth. Well, non-existent wage growth really. Growing unemployment with little respite for businesses as the global economy struggles despite ultra-low interest rates. Well, that's the problem. Our cash rate is so low. We've got negative gearing that's driving investment into property, not other things. Across those surveyed, just one economist, market economics Stephen Kaukalas, is tipping the economy to grow more than 3% this year. How? What the hell is this? Must be out of date information that they've. Well, I mean, okay, it's economics. It's always out of date information. But this article is from today, or from yesterday. Mr. Anthony is the most bearish of the Scope survey panel, saying there is a 75% chance of Australia falling into recession by the start of 2022. Mr. K, in line with his upbeat assessment of the economy, puts the chance of a recession at just 1 in 100. This has to be before the coronavirus issues. 1 in 100, 1%. I mean, it's economists. I mean, let's just have a look here. Remember, these here are all also predictions by economists. So, of course, their modelling must be completely accurate because it's never failed in the past. Just shows a fundamental fantasy world they must be living in. So, the average recession chance for all those surveyed was 21%. Across those sampled, the average for expected growth is just under 2.2%. Mr. Kaukalas said accommodative monetary policy, a slight loosening of fiscal policy from mid-year, and the rebuilding of fire-affected areas all point to the economy improving through 2020. Okay, the rebuilding of fire-affected areas? That's the broken window fallacy. That's not actually any additional growth. Look at the building approvals here. Private sector are down to 8,000 a month. How many homes have been destroyed? You're talking a couple of thousand. That's not going to make a dent in building approvals on a national scale. And then there's also the other costs associated with that, the turmoil associated with that. That's a negative to the economy, not a positive. Let's have a look at this chart that they've got here. We'll have a bit of a play with that here. So, Australia, investment in mining. So, mining business investment, percent change to December 2020. You know, they're thinking it'll go high. Market economists, so we're saying 14% high, negative 3.3 at the lower end. The average is at 5%. So they're taking predictions from these economists and just averaging them out and then publishing that as it has some relevance. I guess. Non-mining. Let's compare. I mean, here most of them are predicting low non-mining. Highest is at 8%. We're getting negative, 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 negative. Lowest is at negative 2.8%. Let's look at housing. So they're saying most of the investment will be in mining. Housing up from 5 to negative 12. So that isn't a good sign. Let's look. Sydney home prices. Predicting 12%. So all the real estate articles will be really happy about that one, wouldn't they, guys? Down to a negative of 5 and 2%. So most of them are predicting up. Do they have the dollar price here? We need to put the dollar price next to all of this because all of this is kind of, you know, Melbourne. They're predicting Melbourne to go up 13%, lowest negative 5, but all of them are positive. Okay, let's look at the consumer price index. We're having two here at 3.5%, 3.5%. The lowest we've got 1.3, 1.3. So they're not saying it's going to go lower. Underlying inflation, and lower with a 2 at the top. Wage price index. Okay, so they're going to year change to December 2020. They're predicting a high of 2.7, 2.7, down to 0.8, 0.8. I mean, let's just have a look, guys. I will bring up this chart. Why do we even ask the economists to predict this? Maybe we should ask business people. Oh, wait, we do. Here's a survey. Business conditions, business confidence. Not looking very good. And it's actually gone down since this chart. I updated and it didn't stick in my software for some reason. There you go. So the unemployment rate. 6%, 6%. That's an increase. And this is based on ABS, 5.5. The bottom is 4.8. So this isn't looking good, guys. Unemployment rate going up that much. Remember, Roy Morgan predicted, well, the ABS is saying our unemployment rate has gone down, or has improved. It's actually unemployment rate has gone down. Roy Morgan's latest survey data has predicted it's going up. So let's this underlying cash deficit. We're going what, from 8.6 billion down to negative 8 billion. The cash rate. Let's have a look. Some are predicting it'll go up to 0.75%. What are we at now? 0.5. Oh no, it's 0.75. I keep thinking we're at 0.5. Do you think they'll cut it, guys? Do you think they'll cut it in the next few days? It'll be interesting to watch. Got some 0, 0. 2 economists saying it's 0. 1, 2, 3, 4, 5 at 0.25. Remember, this is when we hit QE. The average is at 0.43, but yeah, but that's not really relevant. You hear all of them at 0.5. So this is okay. This is in 2020 and 2021. They're predicting the cash rate. Well, the average is a lot lower. 0.5, 0.25, 0. 10-year bond rate. High at 2.5. Bottom at 0.5. Nothing negative. Here we go. The US to Aussie dollar. And I'll bring up the Australian economic growth there. Why can't I? Okay, won't let me do that. Wow. 77 cents. So I'm assuming they're expecting the US dollar to plunge. Let's see what the lowest is. 60 cents. 60 cents. What do you reckon, guys? Where do you think it's going to head? 64, 65, 65. The average is at 60. And this is in December next year. 2020, 67.59. That's what they're predicting. The S&P Standard & Poor ASX 200, 8,034. Lowest is 6,400. We can go all over. Here we go. Let's see what the iron ore spot price is. They're predicting 105. Why? This has to be before the controvirus and slowdown in China, I guess. Lowest is at 60. Terms of trade, 5%. Lowest is at negative 9. Current account deficit, 10 billion, down to negative 20 billion. So here we're getting a bit of an overview of what the results are from this survey. I suspect it wasn't really, well, it has to be out-of-date data. Be interesting to see how they'd follow up on this. So let's have a look at interest rates. Almost every economist is tipping the Reserve Bank to keep interest rates ultra low throughout this year and into 2021. Just one economist, the Melbourne Institute's Gao Lim, believes the RBA will still have official rates at 0.75 following its June meeting. All others, including Mr. Kakalas and Mr. Anthony, reckon the RBA will have the cash rate down at least 0.5. University of Melbourne economist Neville Norman, who has taken part in the Scope survey since its inception 43 years ago, believes the RBA will take the cash rate to 0. Well, this is interesting. I'll have to look into it to see how accurate their predictions are over 43 years. Many expect the lower cash rate to be accomplished by some form of QE, although Mr. Anthony is one who thinks it will fail to work. Of course it will fail to work. It's failed to work everywhere else it's gone. I don't understand. I've been reading too much of this crazy Austrian school. That's my problem, isn't it? Trying to think logically. Doing it wrong, Florian. You're doing it wrong. The quantitative easing policy undertaken by the RBA will be like panning for fool's gold. It could not impact the Australian dollar, as it would be overwhelmed by international capital flows, but it might further exacerbate domestic real property prices by impacting discounting rates, he said. By the middle of 2021, scope participants largely believe the RBA will have cut the cash rate to 0.25, but one Monash University's Jacob Marsden is tipping the central bank to have moved to 2.5%, what will be one of the quickest tightenings of monetary policy on record. Okay, so if that happens, I mean, what do you think that would do to the housing sector? What do you think that would do to the arrears rate? Housing Industry Association economist Angela Lillicrap expects the RBA won't go any lower than 0.25 for the foreseeable future. I mean, even this, it's insane. These rates are artificial manipulations of the market. They're nothing more. Without any exogenous shocks, well, we have those now, don't we? Impacting the economy, the RBA will hold the cash rate at this point for 1 to 2 years, she said. AMP Capital chief economist Shane Oliver also expected the rate to be held at this level for a year. So, I mean, guys, we're not going to go through the rest of this because, frankly, I think it's all out of date. This is all out of date. This is the problem. Because I'll link to it if you'd like to go through the article. But with, well, the coronavirus affecting iron ore prices, demand for materials, tourists from China cut off from the Australian economy in just that one sector there. I don't think this article is going to be that useful anymore. It's interesting to see their predictions, but as they've said, we've got these external factors. What do you think, guys? Do you think Australia's headed for a recession? Is it inevitable? Do you think playing with the cash reserve rate will make a difference? Let me know your thoughts and opinions in the comments below. Thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and want to help us that little bit extra, we have Patreon where you can make a monthly donation. You can also join the channel here on YouTube and help support us while also getting badges and emojis. Finally, we have affiliate links at Independent Reserve, Amazon and eBay for your crypto trading and consumer purchases, Pocket Squares at the HeiseSays website, and PayPal if you want to help us that way. Thanks everyone, and I will talk to you all in the next video. Bye for now.